Hi viewers, welcome to Economy Hut, a channel which discusses all the issues related to the economy. So in today's discussion we are going to have a discussion about one economical issues regarding the Indian economy. So without wasting time, let's see what is there in today's economic discussion. So today's topic of discussion is about the G-SAP program announced by Reserve Bank of India. So Reserve Bank of India is just like a Federal Reserve for the USA. So this Federal Reserve covers all the monetary issues for the USA, like how should be the monetary supply for the US economy. So just like Federal Reserve for the USA, this Reserve Bank of India is there for the Indian economy. So let's see what exactly is this G-SAP program announced by Reserve Bank of India. So this G-SAP program was announced by Reserve Bank of India in its bi-monthly policy for the year 2021. So in the bi-monthly monetary policy there comes 3 months plans. So these 3 months are April, May and June, right? So let's see what exactly is the full form of this G-SAP program. So the G-SAP program stands for Government's Securities Acquisition Program. In securities especially, this program is dealing with the bonds. So these bonds will be issued by Government of India, right? So these bonds will be issued by Government of India in the open market to the common man or to the other peoples. So as these bonds are issued in the secondary market, so if RBI or the government wants to purchase these bonds, then they wants to purchase these bonds for some markets. So this is example of one famous Indian market, which is BSE, which is one of the oldest markets in the world, stock exchange. So if RBI wants to purchase these bonds, then they need to purchase these bonds from the secondary market, which is BSE or NSE, which are one of the famous markets in India. So if RBI wants to purchase these bonds, then they need to purchase through this option of secondary market. So in this way they can purchase the bonds from the secondary market and complete their targets. But the next question is, why government issued these bonds? Like what exactly was the purpose of government for issuing these bonds? Then for each financial year, governments has some prospects, like some plans for years. Likewise we have some plans for our yearly expenditures. So in the same way, government is expected to complete some rail projects or some road projects in each year for the development of the economy and in the development of all the world. So to take care of all these expenses, government tries to work on many parameters, like taking the loan from the international organizations or issuing bonds in their own market. So for this G-SAP program, government is trying to, so before the G-SAP program, government issued some bonds in the Indian market. Now they are going to purchase these bonds through RBI. So after issuing these bonds, government gets some money, so which they use for completing their rail or road projects. Now after issuing these much bonds, government gets lot of money and they complete their yearly targets. So you can see here there are so many bonds, and from this government is going to get huge amount of money. Now if government wants to purchase these bonds, then they need to, government or the RBI wants to purchase these bonds, then they need to enter into the secondary market. And in the secondary market there is this famous common man, the RK Lakshman, and maybe some banking institutions. So if government wants to purchase these bonds from the secondary market, then he need to take these bonds from this, and they need to and then they need to collect it back like this, right? So these bonds will go back to government. But next question is, why government or the RBI is purchasing these bonds? Like, once they have issued these bonds, and so what exactly now is the purpose of purchasing these bonds again? So there is a ratio called as bond yields. So if you have purchased 1 rupees bond for 10 years, so these bonds are sold at some values like 100 rupees, let's see 1000 rupees, right? So these bonds are sold by government for 10 years, which means after 10 years government will purchase this bond again, and then they will pay 1000 rupees to the customer or to the any banking institution who have purchased these bonds. So if they want to, so any person, if he is going to purchase this bond, then he will see some positives from this bond. So this one is positive, like they will be able to get all the capital which they will be investing for the 10 years. And again, one of the most interesting facts for the peoples, like our common man, to invest in these bonds is bond yields, which is directly proportional to the interest rates. Which means if government is going to sell these bonds at 1000 rupees, then they will be selling these bonds at the rate of 5% interest each year. So if government wants to sell this bond at 1000 rupees per year, then all the person who will be purchasing, who will be keeping the bond with them for 10 years, they will be able to get the 5% interest rate per year. So for 10 years they'll exactly be able to get the 5% interest rate. But if government is going to let us rub all this. But if government is going to purchase this bond once again, like government, now RBI is going to purchase on behalf of government. So if government is going to purchase these bonds once again, so after purchasing, the bond yields of these bonds will decrease. Now why bond yield will decrease or increase? That is proportional to the price of bonds. So if government is going to purchase these bonds, then there will be more demand of bonds in the market, right? More demand of bonds in the market. So once the demand of bonds is more, then the price will increase. So there will be this scenario. So if the bonds price is increased, then the bonds yield will fall, and this bonds yield, falling of these bond yields is directly proportional to the interest paid by the government, which is the main purpose of the government for purchasing these bonds, because government wants to decrease its expenditure for all the bonds. So after purchasing these bonds, government's expenditure on the bonds will decrease, and that will be sort of positive thing for the economy and all the expenditure of the government. Now next let us talk about some numbers. So for the first quarter of year, government has decided to purchase 1 lakh crore rupees of bond. So first quarter comprises of April, May, and then June. So for these 3 months, government on behalf of RBI has decided to purchase the bonds of 1 lakh crores, which is a little bit part of government's target for the year 2021. So government's target for the complete year is of around 12 lakh crores, out of which they want to purchase the little amount in the first 3 months of the financial year 2021. So that is all for this video. Let's see more interesting topics in the next video. Thank you.